bring the conversation back home now. There has been some alarmist talk about investors increasingly taking their equity investments as well as other investments offshore. But this is a global trend and it may not be as aggressive as perceived. But is there a way you can adjust your portfolio to handle the headwinds in the current climate without taking it offshore? Well, joining me to unpack this question and more is Andrew Duvenage, who's the Managing Director at FNB Private Wealth Management. Many thanks for your time this evening.
Good evening.
I think the first question I must ask, because I've seen a couple of interviews over the last few days, is it really that aggressive that investors are taking their equity and other investments offshore?
We're seeing significant appetite for offshore investment and significant flows moving offshore from a portfolio perspective. You found that South African returns have been muted for an extended period of time. Investors are feeling the pressure of those lower rates of returns. But we believe that you need to be careful with an all-or-nothing type of strategy and some of the alarmism that you refer to, because it's not without risk. And I think what's happening inadvertently is many investors are increasing the risk in their portfolio without really knowing it and not acknowledging the potential downside if this trajectory changes in terms of rand performance and in terms of overseas market performance.
Yeah, and we'll get into that all or nothing in a minute, but I really want to get a sense of the global environment isn't that inviting either, given talks of global economic slowdown, the trade war, Brexit. Where are investors going?
Well, you see, that's the tricky part, is South African investors might feel that it's a silver bullet to take money overseas. But the question is, firstly, are you externalizing at an appropriate exchange rate with the rand at the level that it's at the moment? And then secondly, what do you put it into? Cash is not giving any return at all, and interest rates are declining overseas. And equity markets are pretty much close to all-time highs. And with interest rates and the yield curve inverted at the moment, that's not typically good for equity markets going forward. So taking money overseas is not necessarily the solution to absolutely everything that is going to result in moving from low returns in the South African instance into suddenly optimized portfolio outcomes going forward.
But when it comes to investment locally, are there pockets of opportunities for investors that don't want to take the all or nothing approach? I don't want to fully go offshore. There has to be something for me here.
Absolutely. I think firstly you need to look at individual investor circumstance. But if you look at the South African market in general, there's been a compression in valuations, and that compression in some ways represents opportunity. There's a saying in investment that I think it was Warren Buffett coined, that when others are greedy, be fearful, and when others are fearful, be greedy. And investing is a counterintuitive exercise. We're pretty much in one of the darkest spaces we've been from a South African market and JSE perspective for a long time, and that in itself represents investment opportunity. So we are very, very cautious towards advising or allowing clients to put themselves in a binary type of position where it's all or nothing. And so local investment certainly still has a role to play. And the compressed valuations that you're seeing in many ways offers a degree of protection because prices are relatively low. The big question is, where does the value unlock come from in the South African market? And I suppose that's really what comes down to risk appetite and time horizon in terms of South African investment.
Now, another component, a very important component, investing includes currencies, the forex and the rand, and we do know that it's one of the most volatile currencies or emerging market currencies in the world. How do we ride out the volatility, and how do we navigate that investment platform?
So the first thing to note is I think that South African investors are quite myopically focused on South African factors affecting the currency, when in actual fact there are far bigger global trends which affect us. So it's understandable that as South Africans we get the news flow, we hear about delayed results, we hear about all of these things, and we get very negative on the local scenario. But global factors like trade wars, interest rates, Brexit, for example, the Trump effect and the disruption he's causing, Middle Eastern oil issues, those type of issues can turn and have an effect on South Africa which goes way beyond the local picture. So when going offshore with money, one needs to be very, very careful about externalizing large amounts of money at specific exchange rates. Is a systematic approach towards it is probably more sensible, and one needs to be very, very careful about these all or nothing calls once again.
Don't go the all or nothing route, but just rather exercise some caution, as you say. Warren Buffett indicated there. I've been speaking there to Andrew Duvenage, who's the Managing Director at FNB Private Wealth Management.